Good afternoon, everyone. It's 4:20 here in the UK. This market bottom that I've been looking for is still a long way away. This is VectorVest USA running in real time, and as you can see today, the number of declines significantly greater than the number of advances. The short-term trend on VectorVest is down, the underlying trend is down, the underlying trend has been confirmed by price action, and we've got a red light in the color guard showing that the price is down day over day and week over week, and VectorVest does not advocate buying any stocks at this time. The market is in a mega oversold situation, but as many of you will know, it can stay mega oversold for quite a long time. I've got a chart of the intraday action. That's a 5-minute chart of the Dow Jones, in fact, and as you can see, the downtrend is maintained. A little bit of a spurt at the moment now, but in the past these haven't come to anything. So a day to sit and wait and do nothing. There was those of you that are intraday traders would have had quite a nice little short here. That support becoming resistance, outside bar, if you've got the stomach for trading a 5-minute chart. I did a video on US stocks a few days ago, and I would like to do the same thing for the UK today. So if we look at the UK market, we can see a pretty much similar situation. Primary wave down, underlying trend is down, underlying trend confirmed by price action. VectorVest does not advocate buying any stocks at this time. 59 shares in the buy, a whopping 1700 on a sell. The buy-sell ratio as low as I can remember it at 0.03, the MTI at 0.3 in a mega oversold situation similar to the US, but as we all know, they can stay mega oversold for quite a long time. Nevertheless, a turn will come, and I assure you that when it does come, that fear will turn into greed in about 30 minutes. It is my view that in both countries we should be looking for shares with exceptionally strong balance sheets. And on VectorVest it's quite easy to find those. If I go to viewers and I just want to go to the stock viewer, that's the stock viewer, folks, and what I've done is that I've resorted all of the shares on the London stock market by our proprietary measure relative safety. And that brings shares with the best combination of safety of earnings to the top of the pile. It looks at the balance sheet, the income statement, the cash flow statement over the last few years, computes all the financial ratios, and finds stocks with the best and the safest track record of making money. Those shares invariably pay a dividend, and they've got a good history of growing that dividend and increasing that dividend annually. Right at the top of the pile, we've got Avon Rubber. It's got a relative safety on a scale between 0 and 2 of 1.51. Anything above 1.3 is excellent. This is an outstanding number. JD Sports is there, Games Workshop is there, Diploma is there. And I've gone through these stocks, folks, and I've come up with a watch list of shares that I will personally be watching, and I have to make it very clear that although these shares are suitable for me, they may not be suitable for you. But nevertheless, these are stocks that have got an impeccable history of making money, and they're deeply oversold. If the market bounces, I think these shares will do very well. I put them into a watch list. If I click on watch list viewer and have a look at this watch list, there they are: Avon Rubber, Lion Trust, JD Sports, etc. And as you can see, the relative safety is all above 1.4 on a scale between 0 and 2. These shares have all got a superb track record of making money, and all the financial ratios are getting better. I think these are companies that'll be able to handle 2 or 3 months of poor sales and come out of this with enough cash to acquire companies that have struggled during this period. And I've charted these in a separate window. There's Avon Rubber, folks. Now I'm looking at a 5-year track record here, and I particularly like the way Avon Rubber's come back and kissed that old top. it's bounced off that old top. That resistance has become support, and if I draw in a fib from that level to that level, we can see that that low is also 62%. So we've got a nice, in fact, confluence of support there. If the general market turns, then I think that Avon Rubble will do exceptionally well. It's already come up from that level, so that's something for you to look at. Lion Trust Asset Management, folks, has come back. Kiss the old top. I'll take the fib out for a second so you can see the wood for the trees. As you can see, there's the earnings per share growing over the last 5 years, going from 20 pence to 70 pence. We've got a strong support line in place. We've got the old resistance becoming support and support again. And if I were to draw my fib from these lows up to that high, we can see that there's a 78% retracement coming in there. So we've got this three ways of, in fact, confluing support and resistance. If I ever do a book on my trading, swing trading techniques, that'll have to go in there. That's a classic example. JD Sports is at support, and although it come back a little bit today, I believe it's still well above that £3 level. I think that if the market does turn, then this can actually double in any form of rally. But I have to make it very clear, folks, that the probabilities, in my humble opinion, favour this as being a bear market rally. Bear market rallies, when they get going, can be high momentum affairs, and both in the UK and in the US, we could quite easily make my annual objective in this bear market rally. Let's go a little bit further. Games Workshop, again, this beautiful three-way method of a confluence. This support level, old high, and the 78% retracement. Look at that earnings per share. Okay. Marshalls, a little worried that this has got a little, it stopped last week. The low was at that 61% retracement. It ran the lows under here. Maybe that's enough, but I have an inkling suspicion that it could easily blip back to £5 before this is over. We're watching it, but it's certainly on my radar. This is Churchill China, and again, look at that earnings per share. It's come right back into this range, broke the 78% retracement, broke the long-term trend line, but certainly if I saw it consolidating around £10, I would be interested in the share. Diploma, again, we've got this three-way method of support and resistance. Old high, trend line, and top support. A 78% retracement was the close last week. I'd be interested in that around those levels when the dust has settled. Halma. Well, Halma, I have an inkling suspicion that it could blip down towards the £16 level, but I love the share. Look at that earnings per share growth, and maybe it's run enough stops down here to generate enough liquidity, but it could easily be calling on £16 before this is over. That's the GB group again. We've got this confluence of this old trend line and that 78% retracement. Look at the earnings per share growth. So this is half a dozen shares that I'm looking at, folks. They've got a excellent, in fact more than excellent, value for relative safety, and the relative safety finds those shares with exceptionally strong balance sheets automatically with no heavy lifting of doing accounting. That's the type of share that I think you should be focusing on in both the UK and the USA, and sitting watching the front page of VectorVest, waiting for a change in direction, which certainly did not come today, the 23rd of March. And if we look at the 5-minute chart again, it's doing its best to get up, but my word, it's got a long way to go before we see a turning point here. All the metrics are down. I'll keep these videos coming, and we'll spot when the general market does turn. I hope you find this useful. Thank you. Bye bye.